obviously some people are really afraid that they will lose their jobs and AI will come and disrupt everything. So people will be always at the top of it. The only thing that will change is the way you do things and the way you perform your tasks. And with that comes also the fact that you can actually, if you get rid of sort of the more manual tasks and the more stagnant workflows, you can actually use your time in a better way, being more strategic. I think people need to be engaged. So you can't just ask someone in a bank or in a financial institution to stop doing what they're doing and just say, forget what you're doing, just do how I'm telling you to do it. You can't do that, right? So there needs to be a proper engagement. There needs to be something called what we call making compelling to people and making relatable as well. You can't just, because again, you're dealing with humans, you need to make sure that people understand what are the benefits of bringing in new technology to make their lives easier, to make the organization's goals and strategic objectives fit for purpose as well when it comes to achieving specific results for the company.
Hello again, everyone, and welcome to yet another episode from AI Leap Makers. And this time we're joined by Edgar Sequeira, definitely someone we connected with on our also journey as we uncover how deep and how innovative and how influential and transformative AI can be going forward in financial sector. Edgar from his side is definitely like a seasoned and expert financial service leaders with over 2 decades experience in risk management, regulatory implementation, strategic change. This is all, by the way, at least from my perspective, someone coming from technology background, foreign and new, domains and topics for me. So I would be also curious to see how, a little bit get a little bit of a deeper look from Edgar's point of view into his world and so on. So Edgar, as I mentioned, within his long experience, currently of lately, he's been the chief risk officer of the capital market division at the London Stock Exchange Group, and before that, he was overseeing senior roles at Deutsche Bank, navigating some of the most complex regulatory and market transformations across Europe, Middle East, and beyond. So someone, as I mentioned, been in the room definitely on high-stake decisions affecting global finance and definitely knows exactly how risk regulations and innovations come together in a good, nice manner. But yeah, thanks for being here.
Thanks, Yasser. Very, very kind intro, and thanks for having me.
And as always, of course, by my side, I have my co-host, Adrian. Adrian, how are you doing?
Thank you very much for having me. Yeah, Edgar, looking forward. Thank you to be on board. Yeah, myself, I think I just introducing from the last time, engineering to the bone, but also very, very much into AI. Looking forward since years for this revolution to start happening, being happy to be in the middle of it and building interesting stuff.
Perfect. And I think a good starting point, as I mentioned, me, myself, I'm sure about that. Maybe also to a certain degree, Adrian also is within the same position as mine. But we see your word as definitely something new and something that we don't have as much information into what it is, what's happening day to day, what's basically the overall topics. And I'm sure also as our viewers, also a lot of them would be from tech background and AI background. They would probably have this kind of questions into mind. So maybe a good starting point is, Edgar, can you give us a quick look maybe into your words? So what does it mean to be Edgar? What does it mean to be in your domain? What's some of the top things that needs to be done on day to day? Some top values that are added to the clients, and basically what are the processes and workflows associated?
Sure. So from my perspective and from my current role and previous roles, when it comes to, for instance, adopting technology, they are the sort of the winners and the losers. And right now we are in that space where people are still trying to figure out, for instance, what AI is, right? And it's a quite exciting moment in time when it comes to understanding how specific organizations are actually adopting technology. And when it comes to my current role and my previous roles, and because I worked in sort of complex organizations and sort of too big to fail organizations in the past, the view of adopting new technology sometimes is quite skeptical view, which means that not everyone is sort of willing to adopt new technologies, new processes, and new ways of working. So AI is something that actually will, in a sense, revolutionize the whole thing. So there were specific events in the sort of in our financial markets or economy that sort of made us adopting specific processes. And I can think of, for instance, of the financial crisis in 2008, or even Brexit, or even IFRS adoption. So yeah, so it's something that is in a way exciting to be part of, but also when you are sitting in a seat of a specific company, it depends on how the company's strategic and transformation willing is shaping up. So yeah.
Okay, but maybe also taking a step back, because as I mentioned, some of us, taking me in as a good example. So I would not know what does it entitles to manage risk and compliance for such big enterprises and such big customers. So what does it mean if you were to explain, for example, for complete outsider?
Yeah. So when it comes to compliance and risk, so when it comes to, so depending on the jurisdiction, you would have your regulatory landscape that you would have to comply with. And then when it comes to internal risks management, you will need to ensure that you have a robust enterprise risk management framework, so you can make sure that not only you are complying with the regulatory landscape, but you also managing your risks as an institution. So depending on the type of institution, you would have specific risks that you would need to factor in, and specific ways of mitigating those risks. So yeah, so if you're talking about a bank, for instance, specific risks like credit risk, operational risk, liquidity risks are sort of the material risks when it comes to risk taxonomy. But when it comes to infrastructural technology companies, you will need to factor in maybe technology and cyber risks that you will need to manage and mitigate as well. So it's depending on the kind of institution or organization you're working with or at, you will need to cater for those.
Okay, that's great, Edgar. And I think that gives us already perspective. So maybe already a first question into this. So how is technology in general, even before AI, because you've been at this decades right now already, how is technology, like how much role does it play into this kind of risk detection in general, and how much you see that even more changing going forward?
Yeah, so I actually see sort of the both ends of the spectrum, right? So you have the institutions that still want every spreadsheet to be checked by hand, and then you have those institutions or organizations who are already piloting AI for real-time risk detection. So I see sort of these two spectrums. When it comes to sort of trust in technology or trust in AI, I don't think we are there yet. So, and I think that's not a negative thing. It's quite healthy, and it's okay, because AI, for instance, is a phenomenal early warning system. But when it comes to final decisions and judgment calls or decisions that sort of make or break reputations, they still belong to people and with humans. So yeah, so I can see sort of both ends of the spectrum. We are not there yet, but on the other hand, there are still organizations that are still adopting manual workflows and processes, and not even looking into adopt new technologies and AI specifically.
And in this case, maybe just to dig one last step deeper here, is what is the level of actually impact and transformation this domain, so risk analysis and risk assessment and the whole basically risk topic, is going to be influenced and transformed by AI? Is this the kind, because there is different kind of, depending on the domain and topic, and this is a question also we ask often our guests, is this the kind of topic that would be completely transformed by AI, or just certain part of it would be, which are like much needed, that would be like outsourced or delivered to AI to overtake, while the rest is, it still needs like a big amount of humans to be available and so on? Or is this kind of, because on the other end of spectrum would be the kind of domains that maybe the AI can overtake already all of the work, and maybe just decision-wise, then it's the humans at the end who needs to conclude that.
Yeah, so I think, as I said, I think it's a question of sort of, again, trying to understand which domain you are at this point, and again, trying to understand when it comes to an organization, an organizational institution that you're working at, what exactly is the appetite to adopt technology. So as far as I understand, I think most of the organizations are willing to adopt new technology, but it's just that sort of uncertainty and the question marks that come with adopting new technology and AI. And I think that's in a way it's okay, but obviously there's so much time that you can spend by thinking, what if you coming to that time that you need to make a decision if you really want to be part of the journey or not. And if you miss the train, it's probably too late. But yeah, there's always the opportunity to adopt when it comes to competitors and when it comes to making sure that you sort of at the same level playing fields. You will need to take action as soon as you can as a company or as an institution.
Yes, and we already seen that, because beyond already the risks integrated into implementing AI, right, or that comes with implementing AI, especially in large organizations that are heavily in very compliance driven industries, so banking, insurance, all of these. There's a huge amount of risk, of course, but there's also the other side, a lot of existential risk of these, basically the underlying foundation upon which value is created changing with AI, and we see that a lot of, for example, banks, a lot of neobanks coming. Of course, I think banks is a very difficult kind of industry to see. It's not a very dynamic one, right? But in other ones, especially technology, I would say definitely that's one of the most, and you see that already in a lot of organizations that are big, just as Meta, Google, having come to a point of existential actually risk, not beyond only the risk of implementing AI and developing new features. So how is that looked at? So for example, right now, let's say you put already into this position, how would you address AI adoption at the moment? So what is the first risks you would look into, especially in financial context, of implementing AI, and how we would deal with that in terms to, as you said, do it in a risk averse way, but as not to be so slow and not to be so behind also.
Yeah. I think one of the things that comes to my mind is sort of to understand when it comes to AI specifically, is for the institution of the company to understand what exactly does AI is bringing to the organization, and with that, as you go on to the journey and understand that, then you can judge what exactly be the risks by adopting that kind of approach, right? So let's say, for instance, if you adopt a specific AI tool within your bank or organization, you need to understand what exactly what are the controls that you have in place to sort of consume that data. So you don't have to. So in the end, AI provides you with the data and what should be the data. But you as a human, you as a owner of the data, will need to figure out the so what and the how we're going to use that data. So one of the key risks that you need to mitigate is trying to make sure that whatever data or whatever output you get from AI is not misused, and that can sort of lead to different topics of conversation around topics around sharing personal data as well. So these are sort of the aspects that a financial institution need to look into before adopting a specific AI solution.
And maybe then to also see it from different perspectives, other than having him here. What is your perspective on the risk, and especially also working on large enterprises such as Epic with heading the AI departments on that? How is the risk handled, and how is it handled also going forward from your perspective, from a builder point of view?
Well, it actually didn't change so much. So with or AI or without AI, as soon as you allow some automation to change your system, to change information, to change data, even to interpret data. So when you change, you can basically delete. You can end up with data loss. You can end up with wrong data that lead to wrong decisions. And also when you read, so you process the data and present the results, you can calculate it in the wrong way. Nowadays, we call it hallucinations, but errors are everywhere. So we basically do always a lot to make sure that the intended calculation or processing rules that we know that are okay are followed. So you implement test systems and user acceptance tests and all this risk mitigation approaches. And that's typically, it's not only in software engineering. Now, I was talking more in software engineering. If you're a car builder or brakes, right? Everything that you engineer and throw out in the real world has some risks. Yeah, so that's basically the standard perspectives on risk. There are, of course, more you said in regards of breaking compliance rules, legal. So it can have even more effects there. And the question is, of course, how does AI impact that? Well, I think with AI, we obviously are now in a position that we're no longer really coding solutions. We're generating solutions. So the amount of automation output, right, that we can throw to the world, to our data, is like 100 times more than it was when you had to code everything on your own. It's not quite like that, because before we used libraries and frameworks, so ready-made software that we just configured to our problem. So by that, with one implementation, actually I introduced hundreds of function points and just trusted that this function the algorithms in my library are working good, right? So you see, there's not really so much difference putting AI to the table. Sometimes I'm a bit amused, because it's just because it's new, the risk awareness, the fear is bigger. But I think half of it is because it's new. And I just see that it's kind of same, but different, a bit a different scale. So it's okay to be attentive. Yeah. But sometimes overreacting is also not helping. But I think I gave some perspective on what kind of risks are there, how it relates to what was there before. So what are the risks that we survived till now? And I can say, like, maybe, I'm not sure, this is just out of my, if we take AI, so maybe AI increases the risk by 30%, but not by 300%. And that's the point I want to make. And just when you use just another library, I'm repeating myself, or just saying, just to make the case here, right? You introduce already a lot of code at once. You don't have the time to assess all that. You trust in many ways. And it's quite similar as taking AI and generating a lot of function points. You trust on many of that, because you don't even have the capacity to really test everything. If you do that, then you don't need AI, then you can code it yourself. This is either you take the gain or you take the risk. You can't have both.
And just to add to that as well, I think it's all about the trade-off between risk and an opportunity. So for me, obviously, there's always a risk with AI. If it's 30% or 20%, whatever, as Adrian was just mentioning there. But when it comes to opportunity as well, it's all about making sure that we use that opportunity to sort of automate specific processes and sort of have some gains, and not just time wasting when it comes to fulfilling specific processes. And the other thing as well is if you don't address, when it comes to risk specifically, what I see that sort of the biggest, especially in risk and compliance, the biggest blind spots that AI can come across is when one is assuming that AI will automatically inherit your governance and risk standards, which it won't. So whatever, if the input is flawed, you're just scaling up your problem, and you are not making yourself any favors, right? So in that way, it's almost like you need to onboard the same way you onboard people when it comes to adopting specific standards. So So yeah.
Yeah, that's. I think this. I think today would be my day to say AI is not so new as we think, and you just named it actually, Edgar. I mean, what's the difference if you take a person, you entrust this person with a task, right? And it's like an AI, like asking someone to give you an answer or asking a today AI to give you an answer. You basically are trusting to some point. And the interesting part is it's not so easy to fix a person. It's easier to fix systems.
Absolutely.
One question here. So this is definitely like a question that comes to mind, because especially when we talk, for example, in financial sector, and also so the expert, let's say we're talking about risk and corporation, like risk in terms of financial institutes and big corporates. A lot of the teams that have expertise and you have experience from that in the past, it wouldn't be the one, and I could be wrong, so that's my question, wouldn't be the one that have also expertise into these new technologies that they need to analyze the risk on. So the question is, how is that handled? I'm not sure if this will be a new thing that comes with AI, for example, with something like AI, but I assume there is different it applies to multiple kind of things that would be new every time. So how would the team that is assessing the risk, for example, for something as new and as unfamiliar to them as, for example, AI, how would they approach it? And how would what is your take on this? Like, is it at the end, is it accurate? The assumptions that they come and the conclusions that they comes into, and if so, how did they come to these to be as accurate as possible?
I think there'll be a lot of so again, and because we are dealing with humans in the first instance and not machines to start with, so I think the ideal solution or the ideal approach would be one to making sure that people need to be engaged. So you can't just ask someone in a bank or a financial institution to stop doing what they're doing and just say forget what you're doing, just do how I'm telling you to do it. You can't do that, right? So there needs to be a proper engagement. There needs to be something called what we call making compelling to people and making relatable as well. You can't just because again, you're dealing with humans. You need to make sure that people understand what are the benefits of bringing new technology to make their lives easier, to make the organization's goals and strategic objectives fit for purpose as well when it comes to achieving specific results for the company. So I think one thing that's very important is engagement. Two is making sure that when you roll out specific adoption of technology, you take it in the very I keep saying to people, don't expect, if you are rigid in adopting a specific technology for 5 to 10 years, don't be expected to all of a sudden change when a specific crisis happens. Right? So I think it's a very good example of the financial crisis that happened in 2008. So with the financial crisis in 2008, the regulators, they sort of enforced in a way the financial institutions to rethink their processes, their risk processes, their finance processes, and with that came adoption of specific technology, adoption of specific data sets, which in the past we actually avoided trying to adopt it. We didn't have a choice, right? So I think going back to your question is, for me, is engagement, having a phased approach and not all of a sudden having like a big bang approach where from one day to the other, you just adopt a new technology without even testing the technology, making sure that people are happy with the technology and make sure that the results themselves are fit for purpose. Then three, obviously, when you implement a specific technology or a specific solution, say AI solution, you make sure that that is actually delivering the results that you're expecting to deliver in finance, be it in risk specific, when it comes to, let's say, risk exposure, the whole thing about having something that automates your end-to-end risk management process. It's actually something quite meaningful when you are having discussions, for instance, with your board, saying, by the way, we have full set of results, which took us 2 hours instead of a month to produce. But yeah, so again, going back to a question, Yasser, is engagement as approach and making sure that the solution is fit for purpose.
Okay. But then I would assume that, and then maybe taking a step back then on this one, I would assume that there are multiple teams that should have the expertise to assess the risk depending on which domain it is. So for example, in this case, the team overseeing risk management of AI adoptions needs to have AI expertise within it, right?
I would say so, but it's not always the case, right? So especially because, so for instance, if you ask me if I was to hire someone in my team for whatever risk function, be it technology risk or credit risk, one of the key requirements that I would ask for this person to have would be AI knowledge. Obviously, when it comes to current state and people who are actually working in financial institutions, not everyone is familiar with AI.
That's the challenge that I'm seeing right now. And that's also what drove my question. So how can a lot of these assessments be accurate, in the context of certain teams and certain departments not having as much equipped with the knowledge and awareness on this?
I think again, engagement, and again, in probably quite a bit of investment in training as well. And when I say training, obviously, I'm not expecting the organizations to spend millions in training, but the basics when it comes to understanding what AI is and what is the best way to work with AI. And I think that will be the minimum that will be required by the organization. So it's
I can imagine that. And maybe to go on to conclude and start transitioning into also a different kind of topic. So into the future, I think we talked about already like the past but into the future, right? So seeing also the people side, and you talked about the people side of risk. So how would that look like in terms of big corporate as opposed to newer, more modern enterprise and organization? Let's say, for example, a fintech as opposed to a big bank or a neobank as opposed to an established bank. How is the culture, do you think, around risk should be embedded for new organization, like the new wave of organization? Should it be still the same structure and the same rigidness of the old way, or do you see different ways of how risk should be handled?
I definitely see different ways. I don't think, especially if you're a fintech or a new organization, you should ensure that your starting point is already at the level that you see fit for purpose when it comes to AI and technology adoption. And that will be almost like an opportunity for you to be at the same level of the sort of the AI. And that for me, it's almost like unquestionable. So obviously, when it comes to more established organizations and more traditional organizations, obviously there's the challenge of bringing people onto that journey, which can be mitigated, as I said, by training and by engaging with people. But when it comes to new organizations, you are already in advantage. You already have that opportunity to sort of ensure that you are ahead of the game. So that's how I see it. That's how I see the difference between new fintechs and established organizations.
Yeah, I see that. And the other take, actually, if we look the complete different opposite, which is a question I would love to ask you, but maybe also it's good to get Adrian's perspective also from his background on enterprise, which is the other, especially for startups, right? So there is the big motto, I think it was coined, I can be wrong, by Mark Zuckerberg and Meta and Facebook and all of that, which is that move fast and break things. So Adrian, maybe for you, of course, to get your perspective, is there a middle ground, for example, for a startup right now? Should it move fast and break things, or should it do differently now with AI? Yeah, but what's your take on this whole thing? Are you with the move fast and break things people, or are you?
Yeah, I'm actually. So it's a two-sided part. On one hand, move fast, big things, but of course in a containment area. So please don't die while trying. That's not good. And I think the term I used, like 1998 to 2005, 2010, was designing by prototyping. It's more or less the same thing. Try to understand what the problem is, what the potential solution is, and then start build and show and iterate. And something changed or improved the situation, let me put it like this, with AI, because it's we can now basically generate solutions way faster, so we can iterate way faster. That means even if we break something, we can fix it so fast that it doesn't make a difference, right? You don't kill project budgets like you killed it before. Before you were working like 20 people, 3 months, and then, oh my God, it's not exactly what we need. And then another 3 months to fix everything, right? And right now with machine learning, for example, so before Gen AI, if you started smart and had some models training, that adds some complexity, but at the end you're doing nothing else than generating code, right? If the model is not doing what you want after 3 months of work, you of course analyze, but in general you clean up a bit your data, you change a bit the hyperparameters, and well, you invest maybe a week and then you retrain. Done, right? And you generated thousands of function points on the fly. So if you can iterate fast, the faster you can iterate, the less riskier it is to allow yourselves to break things, because the thing that you have to be good in is to stand up again when you fall. If you can do that fast, then you can conquer the world. So you see which side of the party I am.
But you're right. Definitely the opportunity cost is getting lower,
Yes.
because things get built faster. You can basically retrace, you can change and adopt to failure faster. But what would be your take from, I think, a more definitely risk aware and just more so a rigid, because finance, even though logistics, as your background was, Adrian, especially in big enterprises, still, of course, heavily structured and so, but I would imagine finance is even more, especially for financial startups and so. So what would be your take for this model on financial startups? How would you advise them? Because to have a good middle ground.
I think this is also nothing that we have to invent new. It's out there already. And what you do is basically you obviously you don't just build things for building them. You build things because you want to have an impact. Of course, you test your stuff, and that's again a good thing today. It's way easier to create tests than it was before. So the test coverage capabilities of today are way higher. Testing, quality assessment is still there, and it's way cheaper than it was before. This is good news now, one. And the second good news is, as I said, same like before, you're going stageful to it. So you can break things on your laptop. You can break things in development. Then, so you go stage wise, right? So having a stage deployment is very good. And in the higher the potential risk, so the impact of errors or problems, right, so the blast radius is, the more cautious you have to be. So you will hear in the engineering world, software engineering world, you have the teams that go trunk based, right? So go only with one main branch and put everything in there because it reduces the amount of overhead of versioning. But if you are in a high risk area, right, then you need to be able to to do hot fixes or to roll back in a certain stage. And then you need to go beyond that, even though it's more cumbersome. So you need to have a main and a test and a dev branch to be able to flexibly deploy singular stuff and so on. So this is something that you have to understand, and it just doesn't go away just because you're a startup. You want to go enterprise, then you have to make sure. And enterprise, especially for banks, I think for banks, it is 4 days. If a bank is offline for 4 days, it's done. As one stayed in my head. In logistic, it was 4 weeks, kind of. I don't know, Edgar, you might know better.
No, even less than that.
Yes.
Most of them were 2 days. If you have like an outage, for instance, your repetition is completely done.
Yeah. So that's why the approach to stay safe are more or less the same. I would say with AI, even we can actually do way more quality assurance than we could before. And by that, we are secure, but still doesn't say that you can go and break things in production. You do this once and then you're out. So don't die while breaking things. That's the only thing you should not forget.
Yeah, definitely. And I think, as you said, like nothing, common sense is still.
Yes, that's the point. That's the point.
It's like underline all of this. So of course, even though there's new technologies, new fast settings and all of that. But
I want to still remember, actually. I'm not sure though, Edgar, maybe you, I actually challenge every guest with that. Everybody is saying, oh my God, if I'm working with an AI, what are the risks, right? And then I say, okay, what is the risk when you work with a human, with your colleague? I mean, you don't have any control on how your colleague has been primed, how he has been trained or not trained. He's most probably also, he can be a good guy, but he can be also very, very perfect in deceiving and hiding problems.
Yeah.
So actually, you're surrounded by high risk individuals around you. I'm pretty sure that the AI is not at that level of riskiness.
No, and especially when it comes to over reliance on key individuals, right? So let's say, for instance, if you take an example of a very good guy, like a star performer, and if he leaves the company and he takes the knowledge with him, how do you make sure that that knowledge is sort of transferred and shared, right? So that's something that sometimes the organizations miss, because I've seen it in my previous life, especially in banking. I've worked in specific programs where key individuals had to leave the company, and then they took all the knowledge with them, and that's massive risk, right? So yeah, the human risk and the human factor is always there, regardless if it's a star performer or someone who doesn't perform as well.
So what I try basically to say in this, when you take this perspective, so you're surviving every day so many humans. So don't you think that you're gonna survive an AI even better?
You're right, yeah.
Yeah, and at the end also it's just about responsibilities in terms of on AI. That's also all centralized with to the tool provider, the product provider, and so on. So could be also in a way much more manageable. Yeah, but it's definitely. But maybe speaking of the different kind of risks, Edgar, also to get different tech doesn't that need certainly or necessary to be only AI related. But from your experience, what is there like a ranking of risks that, oh, okay, this is from top to bottom, this is what should be taken care of priority wise, or how is that usually addressed? So for example, when we took a good example of humans versus AI as a risk, which one to take care of more, is that usually ranks from your perspective, from your process, or how is it?
Yeah, especially obviously you have when it comes to risks, you need to think risk as depending on the organization, right? So if it's a bank or if it's a financial institution, you would have your core material risks, right? So as I said, credit, operational, liquidity, all those sort of the financial risk types. But when it comes to addressing, let's say, for instance, when we launch a new initiative, when we program within a bank or a financial institution, the risks are looked into to a much more detailed way. As in, you look into things that can go wrong when it comes to the project, and that can be anything, right? Can be the technology not being fit for purpose, can pose risks, can be the regulation which is still evolving and it's not final, can be the infrastructure, which is something that sometimes takes a lot of resources and cost as well. So you have your core risks as an organization, but when it comes to the specifics, so when it comes to programs or implementation, you need to take into account more detailed risks. And it's almost like a different level of risk taxonomy, if you know what I mean, right? So you have the higher level risks, and then you have the lower level risks as well.
Okay, and depending then on the criticality of the risk, then I guess more time it's taken to first of all conceive an adoption plan, like and
Yes.
also
Mitigate them as well. I think the thing that is very important is not just the adoption planning and having the contingency in place, but the mitigating of the risk itself, because the risk, we need to understand, risk is an issue or is an event that has not materialized yet. Yeah? So it's something that you think that may happen, but worst case scenario, it will happen, right? So it's to making sure that for you to mitigate that risk, you need to have specific controls in place to sort of avoid that risk to materialize.
But then looking at it from the other side, right? So the other side, which is the seller. So let's say startups that are working to get integrated and get their products and their offerings and solutions within large institutes, especially in the financial sector. Is there something that they can do from their side to facilitate, already thinking the ways to facilitate and mitigate risk as much as possible in order to have faster adoption from their side on these industries?
Definitely. And I think that comes with I keep on going about this, very robust engagement. Because I think when it comes to adoption and when it comes to big organizations adoption of specific solutions from fintechs, from technology providers, is just the understanding and making sure that they actually see the benefits of adopting a specific solution. And I think one of the reasons why specific organizations do not adopt new technologies because they still don't understand what are the benefits of a specific solution. And I think that's something that is very important. And obviously, with that comes the technology provider or the startup or fintech to making sure that they cater the solution to the client or to the bank or the financial institution accordingly.
Yeah, but usually also I would see from my perspective, and I think we had similar conversation with Adrian before, so being a startup and just generally being a solution provider, product seller and all of that is very different depending on organization size as well as also the industry, right? So Adrian, also you mentioned this, I guess we had this conversation as I mentioned in the past, that do you see it differently? What would you do, for example, from your side? Would you still go on big clients? Like what you advise startups to go and handle big clients or have a different kind of approach, or maybe like just not go for certain industries due to these heavy structural risk averse and maybe, just difficulty to move faster there?
The clear depends answer. So it depends on the problem that you're solving. If you're solving, let me say, problems that you solve for B2C, so end consumer problems are totally different than problems within enterprise corporation, where you have long grown, designed, and evolved process structure where humans have roles and tasks are executed in a certain way. For a certain input, you have a certain output, and the follow up, the downstream processes are relying on that. So it's like a machine, right? So it's a very special, you want to basically deliver value in such a machine, right? Like a big logo. Then your solution either has to be very versatile and so easy to adapt to the specific configuration you find in that company. So because you definitely don't want to go only with one big logo, your business would be to go with many big logos, so big companies. So that's why it depends on the type of solution you have and how, and also it is a strategic decision from the beginning. It's not like you have an idea, you solve it, and then of course then you can check, okay, is it now a good solution or product the way it is now to go for a big logo or not? And I can tell you, if you have something that solves a general problem, but in a very strict and simplistic way, it most probably will lack the flexibility of configuration and adaptation to really fit into a big company that is very strict on the structures, how they are doing things. And if you want to remove a part there and replace it with automation, then it has to fit very well there. And you might end up investing more in adapting your solution to their structure than you earn. So that's a point. The other way around, if you are coming with a deep insights and know-how from this type of companies, let's say you come from logistics or from banks, right? So Edgar might know about certain steps in banks or in the audit process of banks, right? Where he knows exactly how it works, and he knows that how the variations are there. So it's always like that. Then this kind of a person can say how a solution has to look like. Then you have something that you can easily offer to big logos, because they will recognize, they will see, oh yeah, I know this problem. And oh, your tool is looking pretty much like my problem, like my configuration, my situation. So I just have to give it another color and put it like 10 degrees to the left and done. Okay, that's easy. Not much work for us and solves it. So that's the reason why I'm saying it very much depends. So it basically helps if you want to go for big logo to have this knowledge from the beginning, or have someone in the team who can tell you exactly what the problems are, what the generic problems are, so you can sell it to more than one company, and then also basically how the whole buying process and adoption process in a company is, right? Smaller companies, you just go to the CEO, show him something that looks nice. He says, how much does it cost? Here, $100 per month. Super cool. He gives it to his middle management and say, now be faster, please. You try to do this in a big logo. There are places where you can do that, but there are places at some point they have to go to the procurement and the compliance department has to accept, and suddenly things get more complicated. So you should be able to survive like 1 year of waiting or longer. Strategy that you have to know before you start.
I think is to preempt the way the companies or the clients operate. It's very important. And again, to Adrian's point, is around make it relatable and versatile and flexible enough so you can make changes along the way. And obviously, you need to have a strategy, and you need to have like if you go for the big companies or big logos, you need to have like a set strategy, but make it relatable, make it compelling, so people can,
Yes.
oh yeah, so that this is where you're coming from. This is why I'm going with you and not someone else.
Okay, then to come to a good conclusion, I would love to then maybe expand our mind and expand your mind, Edgar, so and see just how would you envision a different future? What's the first thing that would come to your mind? Like the things that you think would be improved in a way in your domain specifically, and maybe in general. I'm not sure like if this is which topic interests you more in AI at the moment, and which topic would you really be curious and just overall interesting to see how it gets better and maybe considerably in future.
Yeah, let's just assume it will get better. I think that will be the starting point. No, I think one of the things that I'm very, especially when it comes to financial service, which is the area that I'm very familiar with, is that people taking AI as an opportunity. Obviously, there's, again, we discussed this as always risks, but taking AI as an opportunity and making sure that they use AI the best they can to address specific stagnant workflows and processes that they have in their specific companies, in their respective companies. So that's something that regardless if it's finance, if it's risk, if it's compliance, I think AI will come to solve very, how can I say, very stagnant and specific problems. But at the same time, people need to realize when it comes to big decisions and big calls, so you always sit with a human. It's not like some people are really afraid that they will lose their jobs and AI will come and disrupt everything. It's not, AI won't, so people will be always at the top of it. The only thing that will change is the way you do things and the way you perform your tasks. And with that comes also the fact that you can actually, if you get rid of sort of the more manual tasks and the more stagnant workflows, you can actually use your time in a better way, being more strategic. So let's say, for instance, if you work in risk or in audit, for instance, you can actually use your time to advise the clients and making sure that you are actually adding value instead of sort of spending so much time in sampling transactions, for instance. So yeah, so I think that there's a lot of opportunity with AI, which is quite exciting, especially in the financial services. But with that comes the making sure that the adoption of the AI is not only fit for purpose for the company itself, but also it's a gradual adoption, and it's not just like a big bang or let's just change everything, because with that, we'll always set up ourselves for failure.
But I have to ask, but I think it's also a good way of bringing everything to a good conclusion, because the main topic is risk at the end of the day. So going through also already a lot of big crises in the past, like the 2008, I'm not sure should count Brexit as one, and all of those. Do you see or foresee already a crisis or a huge risk of these big shifts of AI overtaken. Of course, with time, huge amount of value creation that normally was overtaken by humans. So this means a huge shift on the value of certain services, certain products, certain offerings, as well as overall just the economy changing in a landscape of what is it based on, what is at the core of the services. But I'm talking this at a certain point when AI is not the tool anymore. It's basically literally overtaken and being able to overtake huge amount of value from humans and just deliver it.
Yes. So I think, as I said, I think there'll be an initial sort of impact on how things are done, how you are creating value initially. But as time progresses and as people adopt new technologies and AI specifically, I think that will sort of stabilizes in a way, and it's not something that.
So you don't think it's gonna bubble up until something that's leading to a crash?
I think it's something that it will become almost like as part of your day-to-day way of doing things. I use the example of, let's say, for instance, when Microsoft implemented Excel, right? So this was in the 90s, yeah. So everyone that was sort of trying to adopt Excel to do their accounts and their balance sheets and their whatever P&Ls and stuff, they were all worried that they will lose their jobs, and they were all worried that what am I doing here? Because Excel can do everything. You just need to type in specific formulas and you're done. But as we see, most of us are still here. Excel is still here, unfortunately. But yeah, I think it will. It's always there's always the sort of the mindset that specific events or specific crisis will drive to relentless and sudden shifts in the way of doing things. But I think the way things are progressing, and if people will adopt more and more new technologies in AI, I think it will be okay. I'm just being as optimistic as I can, but
But that's actually a good big shout out also to, because we had also before that as a guest Kalim, which is a managing partner of an audit firm. And actually he gave the exact example of Excel adoption, because he also remembered that from his experience. That's a very good one. Yeah, shout out to Mohammed Kalim. But yeah, that's I believe a good conclusion to this whole. But honestly, for me, as I mentioned, someone coming as an outsider to the whole domain of risk assessment, management, and the whole thing, it was very informative to me. Also informative to hear your takes, Edgar's, also Adrian, as always. And yeah, thanks for being here and thanks for your insights.
Thank you.
So thank you very much. Also, Yasser, for the interesting questions and for the moderation. Thanks a lot. And Edgar, thanks a lot for the insights. Great talk.
Have a lovely day, everyone. And yeah, we see you on the next episode.
Cheers.